What's happening, everybody? It's Trev with Florida Real Estate Wizards, aka Trev Knows Real Estates, and I am here with the man, the myth, the legend himself, Chris Coburn.
Hey, what's going on, brother? How are you?
I'm well. How are you?
I'm good, man. Can't complain.
So I wanted to give you a little background of how Chris and I met before I let him go ahead and introduce himself. And I'll give you a little foreshadowing is that my wife calls him Redline Chris.
Yes.
As most of my good friends are aware, Redline is like the lifeblood of what keeps me upright and perpendicular so I can continue to do business every day. So
Right.
It's basically a high power energy drink for those that don't know. And making a very short story of it, I was at Fairwinds one day, had my Trev Knows Real Estate shirt on. So if nothing else, let this be a story about how powerful branding is.
Right.
So I had my Trev Knows Real Estate shirt on. I was walking out and you were like at the ATM.
Yes.
And I was walking out and Chris basically said, he's like, yo, that's a dope shirt. Are you in real estate? I was like, yeah, I am. And, no, I walked past you and I saw the red line. I saw the red line in your hand. And I was
Right.
like, yo, that's the nectar of the gods right there. I was like, that's the stuff that keeps me going. And you had said something, I can't remember.
I know. I commented on the shirt because what you do really well that most people don't know how to do is brand yourself. And it seems really simple to you because you do it so well. But Trev Knows Real Estate is incredible branding. It's easy to remember. It's straight to the point. There's no mistaking it. So when you pointed out the red line, it gave me the go ahead to point out the incredible marketing that you were doing.
I just try to keep it simple, keep a good, clear call to action. So there's no like, ambiguity, like,
right,
you and whatever. Like, nope, this is it.
Right.
See it right in the logo.
Right.
But yeah, right from there, I was like, Chris had told me that he had worked with credit stuff as a credit specialist, and dealt with a little bit of real estate, dealt with a little bit of mortgage lending and everything else like that. And if you want more information about his story, I'm going to go ahead and link his YouTube channel down below, so that way you guys can go and like, comment, subscribe, go give him some love. He has an incredible story that you guys definitely need to hear about. So definitely go show him some love on that. But yeah, we exchanged numbers, and then kind of just from that one interaction, just that one first impression interaction, it's kind of evolved into this relationship to where we are now. And this has been probably about 7 months, 6 months.
Yeah. Well, I want to stop you and remind you about the one interaction outside of racetrack. I think it was.
Okay, go ahead. You can tell it.
In Sydney, and you got out of your car, and I pull up and I said something smart, like trying to be a jerk. And then I hopped out my car real fast, and you saw it was me. You like, oh! And then we hugged in the parking lot and bonded over red line. So
I'm telling you, man, you catch me every time I'm trying to buy red line, man. But
right, it was hilarious.
It was something I had posted, like a status about, like some sort of, I don't even know. So I was like riding high on my ego, and I posted some status about like basically beating my chest about it and whatever else. And then you had kind of stepped out of your car and like basically had said verbatim, like, yo, blah, 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 whatever that status was.
Oh, yes, that's
what and come roll out. Like, of course it would be you.
Right. As you posted it too. It's, that just shows quality.
It was priceless. But the whole reason that I have Chris on here today is that anytime I ever have any clients or any friends or anybody that's just willing to lend an ear that is looking for any type of information of how they can help boost their credit, this is why I'm doing this. So I know credit is a huge thing that some people just kind of lay off to the wayside. Some people aren't really super serious about it. Some people are. For those that just have questions, that may be afraid to ask questions, this is the time that I basically took to kind of pull questions from Facebook, pull general questions, and maybe just a few that I had myself, and kind of shape them down to where these are the more frequently asked questions that everybody's kind of afraid to ask, because when it comes down to it, like, credit stuff is incredibly personable, and not a lot of people are willing to be that vulnerable with somebody that they may not know. And even if they do know them, it's still even like,
Mhm.
because you're exposed. But
Right.
we have to realize is that, with our vulnerabilities, if we're able to put them out on the shelf and say, hey, if it's a bad credit score or whatever it is, hey, listen, I messed up. This is a really bad time in my life. Here's what happened. There's got to be a story behind it majority of the time. And I'm here to help bring that information to you so that way you guys can, help to get yourselves into a better position to where, you can start creating financial freedom for yourself, to where you can maybe get yourself out of a job that you hate, or maybe get out of a living situation that's just not for you. So all of those aspects all tie back to credit, and that's why Chris is here. So we have a few questions outlined. I told him that we're going to keep it super conversational, so be aware that we're going to ad lib and jab back and forth.
Mhm.
But just start off with a couple of them. So here we go. One of the first ones is, what are the real effects of student loans and medical bills on financing approval?
Okay. So it sometimes varies lender by lender. I do know that when it comes to medical debts, if they're in collections, if they go over $2,000, most lenders won't touch it, or they will use that whatever the balance is and apply it towards your monthly mortgage payment. It will count against you as far as DTI is concerned. So if you have, let's say, $5,000 in medical collections, they'll average it out, come up with a monthly payment, and put that as being part of your recurring debts. So if you qualify for, let's say, a $300,000 house, $5,000 in medical collections can knock that down to 250 or something like that. So you'll end up not getting what you want just because you got $5,000 worth of medical debts. As far as student loans, it comes down to how much is it affecting your score. Because overall, what they want is a good score. If you have a 700 credit score, but your student loans are maybe not in the best shape, as long as they are current, even if you missed a few payments, you'll get approved. But if you owe student loans and you have not paid them and you just ignore them, then no, you're not getting an approval. It doesn't matter how high your credit is.
Gotcha. And there was something really interesting that you said within it, and you mentioned the acronym DTI. Could you explain what DTI is for some that may not know?
Thank you for that. Debt to income. It's basically a calculation of how much debt you have in relation to your income. DTI is used to factor in how much house you can actually afford. So very, very important. And thanks for that.
Yeah, of course. And don't mind, we are doing this from home, so my dogs are probably going to sound off in the background here and there. So,
I have a little 2-year-old that no matter how much you try to corral her, she gets out. So you might hear somebody scream, "Daddy, Daddy," in a second. So it's okay, I get it.
So I've got 3 dogs altogether to basically make sure. I went ahead and gave them like little snacks, whatever. I was like, I just need you to.
Yeah, they're like, nope, give us more. They're blackmailing you.
30 minutes. That's all I need. All right, so roll on to the next question. What's the lowest your credit score can be considered for a good loan? 1, and then 2. What will they take the higher of 2 credit scores when looking at a couple, or do they average them? That's a question.
Okay. That's actually a really, really good question. And I think I may have misread that one when we discussed it previously. So my answer may be a little bit different. Now, the lowest credit score that I've seen is a 580. You want higher than that because it's less restrictions on the loans. You get a better rate, better payment, et cetera, et cetera. It's expensive to have a low credit score. So while you can go with someone just to get an approval at a 580, my personal opinion is make sure your score is higher so that there are less barriers to you getting actually approved.
Right.
Now, as far as looking at a couple is concerned, what they do is they take the middle score from each person. Whoever has the lowest is the one that they use. So if the husband has a 620, 640, and a 660, and the wife has a 660, 680, and a 700, they'll use the 640 from the husband, which is good enough for an approval, but they'll use the lowest score. That's in the middle, excuse me.
Gotcha. Okay, cool. That makes a lot more sense. So yeah, I mean, having the 580, because I've worked with other clients before that have had like the subpar credit and everything, and we've been able to work with them. I've heard of like different programs where you can be like where somebody may be at like a 620 or something, and maybe
Hmm.
there's a program that works best for like a 610. Is that
Yeah.
still a thing? So where you can kind of tell them like, hey, you might want to like, is there a way to kind of like knock it down a little bit so you can get into that position?
Yeah, use your credit card. Like if your credit card utilization is higher than a certain amount, then your score will go down. So if you're at 30% this month and you need to knock your score down a little bit, as counterintuitive as it may sound, use like $10 more on your credit card and let that go into the statement close date, and your score will go down and you'll get there. But I know what you're saying because I do see that happen. It doesn't happen very often, but you're absolutely correct. That does actually happen.
Awesome. Yeah, I've seen that's where, somebody, and again, it's people just being super vulnerable and just being really kind of sheepish, like, oh, I don't know, this and that, they kind of just nurse their credit score. I was like, well, we can't help make it better if you don't tell me what it is in order to
Right.
get down to the nitty gritty of it. So, and more often than not, some people, will qualify for that type of thing. They're like, oh, so I'm actually overqualified. I'm like,
Right.
well,
Yeah.
if the lender says that, yeah, you're overqualified. They're like, I've never
Exactly.
had this happen.
You know what's funny about that you say that? I just picked this up from Walmart.
A perfect statement for life right there.
Right.
Why, yes, I am overqualified.
Give that to them as a housewarming present after they get into
Oh,
the house.
that's a nugget. I'm gonna take that one with me for sure. I'm gonna have to not put that. Yeah, man, it's definitely good. So roll on to the next question. This kind of tailors into what we were saying before. How much of a dent does a hard inquiry really make, and does it matter from score to score? For example, my husband's credit age is only a few years, and mine is something around the average of 17. I'm assuming 17 years.
Right.
He has a higher score than I do, but he's worried that a hard inquiry will really affect it.
Okay, so this really depends, and it really sucks to say this, but it depends on who you're working with. It's like when dealing with credit, I see everything, as you're obviously aware. And I've seen people go to a car dealership and say, no, I didn't give them permission to run my credit, but I did sign something, but they weren't aware of what they were signing. And their score drops 70 points because the dealership is shopping their loan around. Yeah, they'll send it to like 13 banks to see who's going to buy what and say, okay, you're qualified for a $30,000 car, but they just knock down their score like tremendously. If you're dealing with a lender, let's say it's a direct lender, the lender can pull credit, see what's best, and tell you, hey, look, this is what you qualify for based on your credit score. So I've seen anywhere from 5 points to 80 points easily. Now, here's the good thing about it, though. When it comes to inquiries, if it is actually hurting your score, you can get rid of it. And here's how.
Okay.
A creditor has to have permissible purpose to pull your credit. There has to be a reason for it.
Right.
Even if there's a legitimate reason, because we live in such a fast-paced society, most people aren't having you sign the proper paperwork to give consent to pull your credit. When I bought my truck, I literally was able to get the inquiry off within 30 days because they just said, can we pull your credit? I said, well, here's my credit score. Go ahead and pull it. They pulled it. I got approved. I got the truck. I got rid of the inquiry. You're supposed to sign a statement that explicitly gives them the right to pull your credit. It isn't anything that they're doing that's illegal, but it's just in an effort to, speed things along a little bit. You might get an over-the-phone verification. Hey, I got you over the phone, Trev. Can I pull your credit? Yeah, sure. Go ahead, Chris. Here's my social security number. Here's my date of birth. I'm gonna send you 2 copies of IDs. That's perfectly fine. But when it comes to my side of things, if there isn't permissible purpose in writing, we can get rid of the inquiry and get your 80 points back easily. So it depends from person to person or creditor to creditor how much of a ding you actually get.
Gotcha. So let's say like you had mentioned that you'd got the inquiry for your truck,
Mm-hmm.
and you get approved and whatnot. Now, is there something like on the consumer side, like you being the consumer, would you be able to go back and say, I got approved with, so-and-so lender or so-and-so bank or whatever it is. Would you be able to go back to those other creditors that they pulled the credit from and say, hey, we've already been approved. Am I able to get those points back? Or is that something that you just kind of have to recuperate over time?
Well, again, great question. There's really no conversation. Once they pull credit, they pull credit. They don't really care what happens after that.
Okay.
So it would be dealing directly with the bureaus, not even dealing with the people who pulled your credit. Going to the bureaus and saying, hey, I didn't give anybody permission to pull my credit. The bureaus will sometimes say, pulling credit or inquiries are an accurate representation of anyone that has looked at your credit over the past however long. That's the way of saying, we're not going to investigate this, but that's when you have to insist and say, unless you can show me what permissible purpose this company had to pull my credit, you guys, as the guardians of my credit report and credit score, have to make sure this information is accurate. And I'm telling you that I didn't go shopping at such and such or this dealership or that dealership. You need to remove this now. And typically they will if you say it the right way. So there's no dealing with the original creditors. You got to go straight to the credit bureaus.
That makes sense. Yeah, that definitely makes sense because they're the ones that basically they're like the broker.
Repository.
Yeah.
Right.
Gotcha. They're the broker that's in the middle of it, but it's awesome. That's actually a really good one too because I know we have people whenever I have a client or anything, and they're all super jazzed. They get pre-approved for however much for their home, and they're all super pumped. They're like 3 weeks out from closing, and oh my god, buy a car. They'll go and get furniture. They'll go and get all this stuff, and I literally am like, I've basically gotten to a point where I tell them like, if you do not have the cash in your bank,
don't do it
outright.
Yeah,
Do not charge it. Just
right.
do not charge it. I don't even care if you're trying to put a pack of gum on your card. Don't do it because this is such a crucial time where everything is very, very, very delicate because you're making one of the biggest financial decisions of your life. You don't want to jeopardize that because you buying that car, you buying that furniture or whatever it is can put you out to where you got that new car, you got that new furniture, but now you ain't got a house to put it in. So,
and some lenders will actually do day before credit pulls, where they'll see if you bought anything the day before you even get to close. They'll pull your credit again and say, okay, well, what happened here? And you'll lose your home 24 hours before you're set to close on it. So just leave it alone. Wait until you have the keys and you're closed and you're clear and you're funded. Then go ahead and get whatever you want.
Right. And it's a bigger thing because there are a lot of good people that just want to have that stuff while just before they move into the home.
Right.
Or else. And that's maybe it's just my old school mentality. I don't even know if it's still a thing anymore. I was like, just put it on layaway or something.
Right.
Just ask them to, whatever it is, whether it be a car or whether it be, I don't know necessarily that you need a car to buy a home or go to a home or whatever. But whether it be furniture or something else, whatever, just say, hey, listen, and I'm sure if you're transparent with, let's say, the furniture company and just say, listen, I'm in the middle of buying buying my home. I'm closing in 2 weeks or so. Is there any way that you can take that item? Because I doubt that unless you go to super luxury and very handcrafted type of thing where it's like a one time only type of thing and not a mass production, you just say, hey, can you just put this to the side for me? I promise I'll be back in 2 weeks and a day to come to this. I just got to get the home to put it in first.
Right. Well, no, you're right. And it's funny because that's why videos like these are important because I remember when I was looking for a house and I went to look for furniture and the guy was like, hey, it's 0% interest for 5 years. You should. I said, no, I'm in the process of purchasing a home. One person at the furniture store was like, oh, no, don't worry about it. It won't show up on your report, not knowing what I do for a living. And I said, oh, that's interesting. Okay, I'll get back to you. And the other guy was like, oh, well, no, then I don't want you jeopardizing that. And I was like, see, this is who I buy furniture from because he's telling the truth. So videos like this are important because people don't realize that you don't go buying anything before you close on your house. Fight the urge. Stay home. Act like you're under quarantine if we're still not under quarantine by the time it's time to close on your home.
That's true. That's true. Just sit on your hands, man. You're playing chess. Sit on your hands until you make the move. So,
Right.
it's one of the biggest lessons I've learned. It's hard for me, trust me. I'm super impulsive. All right, so next question. Is it better to pay bills in collection a little at a time to get in good standing or pay it off in full? I feel like this may resonate with a lot of people.
Okay. Okay, so I have an exercise for people. Here's what you're gonna do. If you have Credit Karma and you have had collections in the past that you've paid, go to Credit Karma. I think you can do it on your phone too, because the web and the phone are a little bit different. Go under collections and you'll see something. If you paid a collection, go under collections and you'll see a thing where it shows closed or whatever it may be. If you click that button, you'll see all the collections that you've paid are still there. When you pay a collection, it's considered a paid collection and it does not help your credit score at all. If you're going to pay a collection, make sure they agree that they're going to remove it from your credit report. And once they agree to that and you get it in writing, pay it if that's what you want to do. If you got a $100 collection and you just want to pay it, go ahead and pay it as long as they're willing to remove it. I don't care if it's $12. Don't pay it unless they're willing to remove it, because then you're going to have to pay someone like me more money just to take it off after you've already spent the money paying it. So do not pay anything that goes into collections. I don't care what it is, unless they're willing to take it off.
And that makes sense because it's like you said, it still hangs in the balance. And so let's say they decide, hopefully not. And if you guys are listening and do this, so help me, I will find you. If they go and pay it, they pay it off. They don't get it. They don't ask for the removal of it along with the payment. Then how long does that usually trail on their credit and like continue to affect them?
7 years.
7 years.
Yeah, 7 years. If I'm not mistaken, it's 7 years. It stays there because it's just it is all right. So to be fair, it is an accurate representation of your credit history. You had a collection, it was paid, and it is now a paid collection. So it's technically accurate. And when you pay it, you're admitting guilt. So you make it harder to actually negotiate if you're sitting here saying, yeah, this is mine, I'll go ahead and pay it. I'll take responsibility. But we're not in the business of and I hope this doesn't come across crazy, of accurate credit reports if they hurt you. Trevor knows real estate, and he wants to make sure that you can purchase a home. So we don't accept, well, this is on my credit report because I paid it. No. Let's make your credit report look as pristine as possible to the lender so you can get your approval. So while it is an accurate representation of what has happened, a paid collection will hurt you. Do not pay your collection accounts. If you don't believe me, look at Credit Karma. You'll see where it says it's a paid collection, or call the collection agency and say, hey, I want to pay this. If I pay it, will you take it off my credit report? Then you'll notice the word games. They'll say, yeah, we'll send you a paid in full letter. You heard the yeah. You didn't hear the paid in full letter part. So when they play back the audio, they told you, yes, we'll send you a paid in full letter, but all you heard was yeah to your question of, will you remove this from my credit report? It gets really tricky and really nasty. So your best bet is just to not deal with collection agencies at all. Once it's in collections, consider it gone.
Got you. So the difference of paid in full versus them actually pulling it from your reports, two completely different things.
Two completely different things. If it's deleted, it's there. It's as if it never existed. So the weight on your credit report is as if you never made a mistake at all. That's what you want. If it's been paid, it shows you made a mistake, you made an atonement for that, but you still made a mistake. You're still held to that. I personally think it would be smarter for them to give you a higher credit score for paying off these collections, because it shows that you are responsible enough to pay back debts that you defaulted on. And if that were the case, I would encourage everyone to pay their collections, but it's not the case. So don't pay the collections.
Yep, that's true. So that's where you step in and basically go working your magic and your wonders.
Right. And if you don't mind, here's how this works. Let's talk medical collections, for example, just to kind of give an example of how it actually works and why I'm able to do what I do, because we discussed medical earlier.
Yep.
If you have $5,000 in medical collections, my doorbell might go off in a minute, so forgive me if it does.
Okay.
If you have $5,000 in medical collections and it's on your credit report, my job is to get rid of it. Here's how I get rid of it. if you've ever been to the hospital and you get aspirin, you have to sign off a consent form that if you're allergic to aspirin and didn't tell the doctor and you die, the hospital is not responsible for your death. That is called an informed consent disclosure. They informed you of the risk, you gave your consent to care, and this disclosure is proof of that. Now, if you don't pay that bill and it goes to collections, the collection agency only gets your name, social, maybe your social, like the last four, sometimes the whole social, and the amount that you owe, and the original creditor. How do they know that it's a $5,000 debt and not a $50,000 debt or a $500 debt? The reason they don't know is because your personal, private medical history is none of their business. So there's no way for them to take the $5,000 collection and say, these are the procedures you've had that brings the number to 5,000. Because again, we're in the business of accurate credit reports. So if they can't tell you how it got to 5,000 due to HIPAA laws and HIPAA violations, you don't have to pay a medical collection ever again. Because if they're able to say, well, it seems here that you got a cancer screening that costs $5,000, the hospital's on the hook now for 50 grand. HIPAA violations are $50,000. So no hospital is going to give your informed consent disclosure, your signed disclosure, to a collection agency. They're just going to give them how much you owe and hope that you don't know enough to where you say, yeah, I do owe 5 grand. I remember going to the hospital that one time and I think it was about 5 grand, and then you pay it, which is a mistake. You don't do that. So it's what we do is, and I know no one even considered it magic, but it's understanding the law well enough to use it against these collection agencies. That's the job.
Because at the end of the day, you're basically, and it's the same thing in America, you know, like you're innocent until proven guilty.
Right.
So you basically have to tell them, like, you need to, like, is it, and correct me if I'm wrong, like, you have to tell them, like, you need to prove that I was there. You need to prove how much it was. And they can't necessarily do that because of HIPAA laws.
Right. Yeah. You need to prove that it's 5 grand and not 50 grand. How do you know I don't owe $500,000 to this hospital? How is it that you're substantiating these numbers without any kind of proof whatsoever? Because they need proof to keep it on your credit report. Because if they don't, they can tack on a $5 million collection tomorrow and there's nothing you can do about it. They have to be able to tell the credit bureau, how did it come up to $5,000? And they can't because of HIPAA violations.
Gotcha. So it's kind of just a catch-22 of a thing.
Yes, it is.
And that's where you step in and basically be the bouncer at the door and tell them.
Right. Get rid of this. Yeah.
Love that. I love that. Man, there was one other question I had that was bouncing around in my head, but I can't remember what it is. It'll probably come back to me in a minute.
Mm-hmm.
Pay bills and collections. So let's go on to the next question. Here's a good one that's current with the situation. Can you buy a house while unemployed due to coronavirus?
I think my 2-letter answer to that question was just no.
Nope.
Here's the reason.
Okay.
Some people have stellar credit and they've been furloughed or even just unemployed, whatever it may be, due to coronavirus. That sucks. But even if you were to get somehow to the closing table and put up that charade that you still have a job somehow, they will do same-day VOE, which is verification of employment. So if you say you work wherever, they will call your job at the closing table and say, does this person still work there? If the answer is no, the deal is dead and you lose your money. So wait until you get employed again. That's when you look to buy a house. If you think you may be getting unemployed, I hate to say this, then you should be trying to buy a house right now. If you feel as if your job might not be around the next 6 months, if your goal is to buy a house, buy one now. If you want to wait till after the 6 months until you're a little bit more stable, then wait. But don't do it while you're unemployed. That's not going to work.
That makes sense. Because, I mean, that kind of tails into, you know, like the whole forbearance thing and everything like that. And we've talked offline about that before, to where people think the forbearance is just like, oh, you know, you don't have to owe those payments back. And it's just free money for 3 months to 6 months or something like that.
It's a trap.
It's a trap. It's a trap. It's a trap.
Don't do it. Don't do it.
So, yeah, but I mean, if that's the case, and you know, if you're in a position to, you you know, you have good credit, you have a solid job or anything, but maybe it's shaky getting on later on down the road. I mean, I would always like, if it's a matter of a pre-qualification or something like that, or just seeing where you're standing as far as you know, qualifying for a house or something goes, then to do a pre-qual now, you know, prior to everything basically going south with your job, if you're able to continue to stay at that job and, you know, and you get a promotion or something like that, that pre-qual is usually good. And correct me if I'm wrong still, it's usually good for like at least 6 months or so long as you still hold the same position and you still,
Right.
I think your rate of pay hasn't changed, your hours haven't changed, you know, your position, yada, yada, yada.
Right.
People is like the only thing that's going to make a difference is if you get demoted or, you know, you have a loss of hours or something like that
Right.
due to COVID. But I was like, if on the plus side is that if you get, you know, a promotion or something, or, you know, you end up staying in the same industry and you go to a higher paying job, it's only going to weigh in your favor. So
Right.
you're able to qualify for a little bit more.
Right.
Gotcha. So, what was the other question? Is there one credit bureau that holds priority over the others? So before we dive into that, can you just tell us basically what the credit bureaus are for somebody that may not even know entirely, that's completely green to all of this, and, you know, what's the best one, you know, what's the best one that if they're looking to start building their credit maybe, or if they're looking to buy a home, or if they're looking to, you know, get a car loan, which one kind of tailors specifically to what people may be looking for?
All right, so I got to give you a little bit of praise for that because I'm able to notice what people possess that I don't. And you explain things very thoroughly and very well. See, one of my issues is I just assume everyone knows what their credit bureaus are. But see, the thing is that while 99% of people may know, there's that 1% of people who don't know. And I appreciate the fact that you slowed it down for a second to say, hey, let's even discuss what the 3 bureaus are and their role, et cetera, et cetera. That's incredibly impressive. So thank you for that.
I'm here
3
for
credit bureaus, TransUnion, Equifax, and Experian. They're the mythical 3-headed monster.
I like that. It's probably the best description I've ever heard of them.
See, because they'll all have the same information regarding what's on your report, but the scores are totally different. So the way that they formulate the scores, it's a mystery because you have a FICO score, then you have a Vantage score. A Vantage score is what you see on Credit Karma. So for those looking to purchase a home, when you look at Credit Karma and you're like, I'm a 780 on Credit Karma, you're probably not. You might be a 580 on your actual FICO score because Credit Karma is oftentimes so far off, it's ridiculous. So now,
before you go off on there, could you say that, and I'm going to take a stab here at it, would you say that Credit Karma and Zillow are kind of in the same type of
It wouldn't surprise me if they're owned by the same people.
When it comes down to it, because if Credit Karma is basically telling you, yeah, you're good, go for it. Right. And Zillow saying, yeah, your home is worth $300,000 when you got a bedroom, 1-bath shack.
Right, exactly. Right.
I just had to take a second.
Zillow's like, the mother-in-law suite is worth $450,000, but it's 800 square feet. Oh, 460, excuse me.
Oh, sorry. When you put it that way, yeah, let's list it. Let's do it.
So Equifax, TransUnion, and Experian, they're the ones that report or give you your credit score. They look at your overall credit history, your credit worthiness, and with their proprietary formula that only they really understand, they formulate a score. And it depends on what you're trying to do with your credit as far as who holds precedence over the other. American Express, if you're looking to get an American Express card, they typically look at Experian. If you are looking to get a Barclays card, they look at TransUnion. If you're looking to purchase a home, they look at the middle score. You have the high one, the low one, and the middle one. They'll pick the middle one. It doesn't matter which bureau it is. If you're going to buy a car, I know that through Toyota Financial, they look at Experian. So you can typically ask whoever it is you're trying to get credit from, which bureau do you guys look at? and it will give you a clearer expectation of your odds of approval if you know which bureau they look at, and they'll typically tell you. So it just depends on who you're trying to get credit with.
Gotcha. Gotcha. That makes sense. Yeah, and I think that's a lot of bigger thing because just like you were saying, some people depend on Credit Karma heavily and everything. And I know good friends of mine do it. I'm like, it's okay, but it may gas you up in the minute and make you feel great and everything like that. But when it really comes down to the brass tacks of it, like that's probably not accurate. So for me, I would rather get the accurate information. So if there is an issue or something like that, I know how to fix it, or at least I know who to go to fix it. That guy, and that it's because it's only going to benefit you. You know, because if you keep riding the sugar high of it, you're kind of just keep dancing around the subject and nothing gets done. So, that's just my 2 cents about it. But
I'll give you a resource that you can put in the link here for people that want to know their mortgage score.
Yes.
It's a website called MyFICO, myfico.com, and you'll put that in the description. It's expensive, but if you're looking to purchase a home, it's the best resource you can have. If you're looking to really get anything, it's the best resource because you have 20 plus credit scores. And MyFICO will tell you what your credit card score is. So if you're going to go get a credit card, you'll know what the score that the lender will see is. If you're looking to get a car, it'll tell you what your auto score is. And it breaks it down and says, this is your auto score. So there's no guessing. You want to purchase a home, it'll tell you what your home mortgage score is. You want just your regular everyday credit score, it'll tell you that too. So myfico.com costs $40 a month. But if you have a window, let's say a 6-month window, you're trying to buy something, anything, get myfico.com, pay the $40 a month, and there won't be any surprises, and you won't have to get a bunch of inquiries because you can go to a car dealership and say, this is my credit score. Let's run a scenario based on this score. What would I qualify for based on your rate sheet or whatever if I'm at a 720? And they'll say, well, we got to pull your credit. No, you don't. I'm at a 720. What can we do? And if I'm not at a 720, I fully accept that the terms will change. But I want to get an idea of what it is that I qualify for at a 720 based on that score. And again, if you have MyFICO, there's no guessing. You'll be able to know exactly where you are, and that will cut down on the amount of inquiries that you have on your report.
That's awesome. That's awesome. So that's something, and I have a couple things. So first and foremost, just keep this question in the back of your head before I forget it. They said that you have 20 different credit scores?
Yes.
Okay, first, go ahead. Okay, so seed that in the back of your head.
Right.
Second, with my FICO report, let's play that scenario out for a second and say that somebody's going to buy a car. Let's take the house equation out of it. Somebody's going to buy a car. Is that something that they can go on like myfico.com, get their report, either have it printed out or emailed to the dealership and say, hey, here's the verification from the actual website itself. Here's where I'm sitting at. I pay this $40 a month. So that way I don't basically get killed with my credit score inquiries whenever I go to purchase a car. And I mean, I think that like, even if you're in the market, because I mean, honestly, if it takes you 6 months to buy a car, like,
right.
But I would think in my head, it would probably take less than a month for me to really buy a car. So
yes, no, for real.
I already know what I'm going to be buying.
Yes.
Pretty much, all those things aren't really worrisome.
It's worth the money. It's worth the $40. Well, to answer your question directly, no. You can't tell them, hey, I'm paid this amount of money. What it is more of a bargaining tool.
Okay.
If you go in to see, what people end up doing is they'll go from dealership to dealership hoping they can get a good deal. And they'll get a million inquiries on their credit report. And not knowing what their credit is, they'll get their credit run, and then the dealership will send it to everyone that they do business with. And then one inquiry turns into 17, your credit score tanks. It's not worth it. So if you have that, you can literally go in there and say, all right, I lease cars, for example. When I leased my Lexus, it was through Toyota Financial. It was, who's the leasing company for Lexus? Oh, it's Toyota Financial. Okay. In order to qualify for this lease special, what would my credit score have to be? I would have to be over a 680. Okay, great. I'm 718. Oh, well, where'd you see that? Credit Karma? Because there used to be people coming in there with Credit Karma saying, but I have a 700 credit score. Why is my payment $3,000 for, whatever? A Chevy Nova. So if you have my FICO, you can literally go in there and say, no, I want you to work this deal based on the credit score that I'm telling you I have. If you can't do it, there's no hard feelings. I'll go on to the next person, but you're not pulling my credit. We're not doing a credit application until I see what the numbers are on this particular credit score. But you have to make sure you explain that you're willing to accept something different if the score is different. The score won't be different, but you're basically putting them at ease and saying, hey, look, if you're right, I'll give you permission to run a credit app right now. We'll figure out the best way to go for your financing. But I know I'm right. So let's run the numbers based on this score. And eventually, if the numbers look good, you will have to let them run your credit, but just tell them to run it with the specific bank. So if it's Toyota Financial, I don't want you sending it to Ally Bank or Santander or whatever. Do it with the bank that you guys use, your preferred bank. That's the only person that I want touching my credit. Don't send it to a million different people. So I agree with you. If you have my FICO, it's worth it because it makes you a sophisticated buyer and you get things done quicker.
Yeah, because you're informed, and you took the time to basically educate yourself, and you took the initiative to say, instead of me basically, getting crushed with all of these inquiries and everything,
right.
I just want to be proactive and say, here's where I'm at,
Right.
I think the $40 is well worth it. And honestly, if it takes you more than a month to buy a car, we're going to have to talk whenever you come to buy a home, because if it's a year-long process,
right.
that's why you pre-qualify your buyers.
I agree.
And just to shake loose the people that are the tire kickers. But
right.
Anyways, going on to the last question. I'm pretty sure we have already hit on this, but we'll go ahead and drive it home with this. Which credit score is most important when looking to buy a home? And I know you mentioned it before, but I think I probably even slipped and didn't hear it.
No, it's cool because I go off on tangents sometimes. You might miss something that I said because I said another thing. So the score that's important whenever you go to purchase a home, if you're by yourself, it's the middle score. If you're with someone else, it is the lowest middle score between the two of you. So again, a middle score is if you have a 620, a 640, and a 660, they're going to go for the 640 because it's right in the middle. And that's what they'll use to qualify you. That's the most important score.
Gotcha. And that's from the three credit bureaus. So before I let you go, the 20 credit scores.
Yes.
That sounds like a lot.
Right.
So brass tacks that for me. Just give me the nuts and bolts about it. What is that even? How is 20? Because I can only imagine that the people that are listening to this or watching this are saying, okay, well, there's three credit bureaus, there's this and that. I need to be at this number, and now there's 20 credit scores. Like, how do they even? So their heads are probably exploding. Just about like mine is right now. I feel this is me being in this position right now is like somebody that I explain the real estate process to. That's a first time home buyer, and they literally just have this like
glossed over look like. Yeah, I understand. I get it.
Yeah, I totally get it. Walk away.
Right. So, all right. So the 20 scores are honestly a little bit repetitive because the FICO formula changes every so often. So you may have FICO Classic 4 that they use for the mortgage, but the previous model was FICO Classic 5. It went backwards somehow. Okay. So if they have FICO Classic 5, some lenders may still use that, but then you have other lenders that use FICO Classic 4. So it is a reiteration of the same thing. Your auto score, your mortgage score, your credit card score, your insurance score, all these different scores, but it's different formulas on top of that. So you may have 3 to 4, 4 to 5 different variations of the same exact thing, and my FICO will tell you, this is the newest version of the mortgage score. This is what lenders are using today. This is the newest version of the auto score. This is what most lenders are looking for today. So it just keeps you informed, but lets you know that other models do exist and other people may use those models. So here's a copy of those as well.
Gotcha. Okay, cool. So it's basically, so the long and short of it, it's kind of like it's different formulas of what all comes together with each creditor that they'll say, you know, this is how we run it. Here's how we get these numbers. This is how we run it. This is how we get our numbers, and blah, 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 blah.
Right.
That my FICO kind of basically simplifies all of that and brings it down.
Yes.
Here's this. If you're purchasing this, here's where you're at. If you're purchasing this, here's where you're at. If you're purchasing this,
Yes.
Gotcha. Awesome. So now that we've pretty much wrapped up all the questions, feel free, step up on your soapbox, loud and proud, cape flying in the back, tell the people what you do, get yourself some business, just inform them, tell them, break it down for them.
Okay, so I apologize in advance because this may be anticlimactic. I'm being honest. Sometimes I'm a little bit idealistic, and here's why.
Okay.
I fix credit. I'm the credit guy. I work with a lot of realtors and loan officers.
Okay.
I deal with typically people who are looking to purchase a home, and there's a reason for that. Doing credit repair is not necessarily about the money. Of course, I have bills to pay. You know, everyone likes to get paid, but it's about the end goal. So if you're just Joe Schmo and you want to fix your credit, I can guarantee you that after you pay me, you'll probably disappear. Unfortunately, you will. And that seems like every business owner's dream. What, you pay me, I don't have to do anything for it? I don't like that, because what's going to happen is a year from now, you'll come back and finally remember that you paid somebody to help you with your credit, and then say, hey, what's going on with my credit? And then it becomes a whole nother issue. So if you're looking to purchase a home, there's a deadline. So if Trev says, hey, we're looking to close on this file in 3 months, I can say, cool, we have a deadline. Hey, Mr. or Mrs. Buyer, did you get that paperwork in the mail? Send it over to me. I'm on top of you. Trevor's on top of you. The loan officer's on top of you. Everyone is in this together to make sure that you purchase a home. So while this information is more for anyone that views this video, my focus is on people looking to purchase a home, because those are the people that stick around and do what they need to do to ensure that this process goes the way that it needs to go. I want to see you guys in homes. I want to see you happy. I want to see you prosperous. And the only way that I can do that is with your help. So if you're looking to purchase a home and you have credit issues, reach out to me. Trevor will put my number in the description. If you are the referral of a friend and you are not looking to purchase a home, that is the only other way I will take someone that's looking to fix their credit, is if I helped your family member or your friend, and your friend's like, hey, this guy can really help you, and they send you to me as a referral. But if you're just looking to fix it just to fix it, then we probably won't work together.
Gotcha. So you heavily pre-qualify your clients, basically saying
have to. It's just like I said. I've learned a lot. I've been doing this for 9 years now, and one of the biggest things is, again, it's accountability. And there are times where there are misunderstandings. As a matter of fact, I got a text. I'm gonna send this to you actually. A text from a lady saying, "Hey, what's up with my credit?" I have a CRM, like any professional does, that keeps track of all my clients and all our interactions and everything. So I put her number in the CRM, and I'm like, I can't find her. That's weird. So I go through all these things trying to find her, and I say, hey, what's your email address? I'm going to shoot you an email. She sends me her email address. I search through my database, and I find her. She's from 2018. She had $6,000 worth of collections, 6 collection accounts. We got rid of 5 of them. There was a $124 collection left, a medical collection. She was good to go to purchase her home. She disappeared. Didn't contact the realtor, didn't contact the loan officer. I don't think she had anything on her credit report again, but after disappearing for 2 years, she texted me wondering, is there any update on her credit report? We spoke. I spoke to her daughter. You know, English wasn't her first language, so I spoke to her daughter, explained, hey, we finished this 2 years ago. Did you guys purchase the home or not? She says, no, we did purchase the home. She just wasn't really clear of what actually happened. So if you aren't being taken care of by a team, a lot can go wrong. If it's just you and I, I can do my best and we can get things off your credit report. But if I don't hear from you as a client, I can call Trev and say, hey, your client is not responding to me. And he can get on you and get you back on the ball. So it's not necessarily about making the most money in the world. It's about how many people can I help actually achieve the dream of home ownership. That's what I'm about. And if that's what you're looking for, my number's in the description.
Love that. I absolutely love that. Because yeah, I mean, there has to be, let me see if I can say this the right way. There's got to be a reason for you to be able to be willing to bring a professional in order to do that amount of work, because I can only imagine. I mean, I know I'm busy as a realtor and doing creative stuff with real estate, but I can only imagine the immense amount of work that it takes to basically like start ripping somebody's credit report apart and getting down to it and saying, okay, cool, here's what we need to chase down for this. Here's what we need to chase down for that. Here's his phone call. Here's his email. Here's his blah, 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 blah. And you got just one client. I mean, this is me from the outside looking in. So if that client doesn't have, and this may come off as brash, but if they don't have the respect for what you're doing, and all that, and there's no end goal for it, then what's the point? Like, if to me, like, I'll have people say, hey, you know, I'm considering looking at a home or considering selling or looking at buying in like the next like 5 years or so. And that's fine. Like, I always want to be that referral source. Like, I always want to be that safe space for somebody to say, hey, you know, I'm kind of considering it, you know, what's this and that. And I was like, I'll give you the 10-second story of it. But until we're, I would say, less than 6 months out, there's no real reason for me to get down to the total nitty-gritty of it, because you can know everything that you will need to know, but that's what my job is. So let me handle my job. Let me go ahead. You need to put your faith and trust in me that I'm going to get across the finish line. Most people don't get serious about something until there's an end objective in sight. Whether that objective is latched onto a home, whether that objective is latched to a car, whether that objective, you know, even if somebody, if I were you and somebody came to me and is like, I just want to build my credit score so I feel more confident about doing something, awesome, because that's even deeper than an object. You know, that's just where I would stand. You know,
there's a why. You're doing it for a reason. You're not just and I don't mean to, you know, belabor the point, but that's why there's a lot of companies. I won't say anyone's name. By law, it only takes 30 to 45 days for a collection agency to respond to a validation request. A validation request is basically asking them to prove that belongs to you. Now, if they don't respond, it has to come off your credit report. So when you deal with a company that puts you under contract at $129 a month for 12 months, you know why they're doing that? Because you don't have an end goal in mind. So you're willing to die by 1,000 cuts over the course of a year, and you pay a whole lot more than I'm going to charge you, literally for nothing to be done. So if the reason that it takes me 3 months, for example, 3 to maybe 4 months, depending on the participation from the client, et cetera, is because you send an initial validation request, you get a response. If you don't like the response, you send a follow-up validation request, you get a response. If you don't like the second response, you send the third validation request, you get a response. That typically takes care of everything that's on the credit report. If they refuse to remove something, but they refuse to prove that it's yours, you take them to court, you win $1,000. That's another video for another time. But that's as long as it should take. But if you've been with a company for 12 months and your score went up, let's say even 80 points, that's because you've been paying your bills on time. Has nothing to do with what they're doing for your credit. It's because you've been paying your bills and your credit report is aging. And an aging credit report boosts your score. So I don't want to, and I don't call it taking advantage, because these other companies are businesses as well. And if you have 50,000 people paying you $129 a month, you're not in a rush to help any of them. Like, that is your lifeblood. That is smart business, but it does not take 12 months to fix a credit report. Simple as that. So if you don't have an end goal, you will be paying $129 a month for the next 18 years, like child support or something, for literally no reason at all. So that's why we don't do that. You got to have a goal.
And even as you stress that, as like as far as the time constraints and everything go, I didn't even know that you could do something that expedited. I didn't know that it
Right.
was something that quick, because even with real estate, it still takes like about 90 days from you beginning to end to transaction. But the fact that I mean, I've seen your stuff on social media and everything, and I follow your personal page, I follow your business page, and the stuff and the testimonials, reviews, whatever you want to call them, they are insane. And I don't exaggerate with a lot of things in life when it comes to business. Maybe outside, whenever I'm telling a story or whatever else, like, oh, I caught a fish, but it was like a 700-pound fish. No, it was like an 8-pound bass. Get off your high horse. So
Right.
we have the pictures, you photoshopped it, but
Right.
the stuff that you've done that I've seen with people's credit scores, it's basically just been like screenshots of,
Right.
here's where they were when they started, here's
Right.
the process that we took, and here's where they're at now. And typically, sometimes that stuff has even been as short as like a month, or maybe
Yeah.
even
Yeah.
6 weeks.
Oh, okay. I'm gonna give away a little bit of a secret on that. Here's how that happens. Because again, we have to understand the law. So there is a collection agency that a client of mine had called DeVille Asset Management,
Okay.
and it was a repossession for $16,000. It took us less than a month to get rid of the collection. The score jumped 130 some points. Here's why.
Whoa! What?
Well, here's why. Here's why. In the state of Florida, Florida is one of the best states for consumer protection. So in the state of Florida, you have to have a license to collect the debt. DeVille Asset Management does not have a license to collect the debt in the state of Florida. Right. So a lot of these collection agencies that people are looking for, they don't have the right to even collect here. So I went online and I realized I didn't have a license to collect. I printed out a copy of the expired license, sent it to the bureaus and said, this person is not able to collect. Here's the Florida statute that governs that. You need to get them out of here. And the collection agency said, you're absolutely correct. It's not about whether it's yours or not. It doesn't matter if it's your debt or not. They don't have the right to collect this debt. It has to come off your credit report, period. So things like that won't take us a year and $129 a month to fix. We look at the report before you ever pay us any money. That's why we guarantee it. It is guaranteed. Let's look at the report. Let's see what needs to be done. Okay, here are the problem areas. Here's how we're going to handle this one, this one, this one, and this one. And we put that plan to work. And it doesn't take that long if you do your part, which is why you need to be purchasing a home or doing something of significance, because you're going to stay on top of things if you have something to lose.
Yep, definitely. When it comes into something being compromised, then that's when
Right.
people really start paying attention. So especially like when it comes to a home, like that's
Right.
But man, so it seems like it's that's probably as about of a good of a case as it can get. Like the only thing I can kind of relate it with, and I've never been in a position before, but that like you could basically get convicted of something, and then the judge that sentenced you for it ended up dying or whatever else, and you're like, yeah, freedom. They
That's
go back and they're like, I don't know, we can't find any records of it, and you're like, oh,
Right,
weird.
exactly.
So that's crazy, man. I mean, I've heard of that before, in a couple different instances, like where you're talking about them having to prove it and having like the 30 days and so on. But the fact that you care enough about the clients up front, and it's not just a matter of everybody still has to get paid, everybody has bills to pay, just like
Of course.
I completely understand that, but it's not a matter of how many numbers can I pump in my pipeline just
Right.
to keep continuing having them shell out and pay me or whatever.
Right.
And I think that really comes down to a matter of principle, and
Right.
that's why you and I resonate really, really well, because
Yes.
I would much rather, like me from real estate, I would much rather be upfront, transparent, and sometimes even not rude, but like, hey, here it is, man. Like this
Right.
is it. And it's going to be the bitter pill that you're going to have to swallow. But I'm doing this for your benefit because
Right.
I actually care. And
Right.
because I took the time, and some realtors don't do it, some brokers don't do it, some credit, and while I'm on my tangent, what is your title if we had to put it something? Because I keep calling you my credit guy, and I want to make sure that I put it the right way. Would you prefer
That's
credit specialist, credit guru?
with the realtors and loan officers. Let's call it a selfish thing. It saves money on marketing, realistically, and I have to do a good job for the client, because if I don't, I'm not going to get another client from the realtor. So I have three people to make happy: the client, the realtor, and the loan officer. So that's the type of system that I want to be in, which is an accountability system, and it is the reason why I do it the way that I do it. Now, going through the whole sound thing, you made me forget that question you asked that I completely skipped over. What was that again? I apologize.
I don't even remember what the question was. I got basically, I can't remember. I'll look back and probably kick myself in the ass for not remembering what the question was.
Because I'm sure it's a good one, and I ended up skipping over. That's my fault. I apologize.
No, that's okay. But I mean, kind of tailoring off on that, and then I promise I'm gonna let you go. I like even whenever my broker basically ran our numbers from last year, because you had mentioned marketing and everything, and being able to be selfish on saving the money on marketing, because I'll drop a little bit of a nugget of knowledge on y'all real quick about how expensive marketing is when it comes to whatever business it is. And I can only speak from realtor experience, but it costs us, like if we pay Zillow or Realtor.com or whoever else, whatever the other bigger marketing websites are,
Right.
exactly what they are, it'll cost us anywhere between $100 to $200 to get one lead. And that one lead may not even be doing anything within the next year. Now, that's only from one lead that we get, and of that pool, we may have about like 10 to 15 or so, but there's typically statistically, there's only one good solid lead that comes out of that. That's usually ready to do something, hopefully within the less than 6 months. So it is a ton of marketing dollars out.
Right.
And there's sometimes it's just not a return.
Right.
And if it is, that you hope that the commission is able to basically break you even on the marketing cost for some people. That's why I drive so heavy with branding, because branding is so much more of an impact because it drives referrals. And even if, because I harp on Trevino's real estate, I'm sure Chris harps on, I'm sure you harp on, credit report and everything, or credit specialist rather. But it's the fact that referrals are bread and butter, and that's what the lifeblood of the business is. So whenever my broker basically ran the numbers last year, he said that 72% of our business came from referrals. 72%. That is astonishing, and
that's nuts.
It's simply because that you take the time to basically pre-qualify your clients, and you take the time to care about them, to not sugarcoat anything up front and be like, hey, listen, this is the hard part. This is where it's gonna get really difficult, but I'm here with you every step of the way. I'm not going anywhere, and I'm making sure that you and I are gonna be sitting there at the closing table, make sure that everything is copacetic. So that way, once your keys are getting, and don't think that once you get your keys in your hand, we take a picture for Instagram, whatever else. Oh, I love my realtor. I love my client.
Right. You're stuck with me for life.
Don't think that relationship is done. This is the beginning chapter of that relationship. So now there is a novel that comes along after that. I feel like that's the same way you run business. So you and I basically we vibe really, really well with that type of mentality, because at the end of the day, if you take care of the business, you take care of people first, the money will come. And
it's gratitude marketing. And I remembered your question, but it's gratitude marketing. It's because when people are grateful for what you've done for them, they're willing to share you with other people. So it saves a bunch of money when you just do the right thing. But the question that you asked was, what do I refer to myself as? And that, me forgetting, actually goes into my answer. I don't really care. It's credit specialist, credit guy. It doesn't matter. And the reason for that is because my objective isn't necessarily ego. It's more of a, how can I help? So if you refer me as Chris, your credit guy, I'm not going to say, no, they have to call me by my proper name, which is Sir Duke of Credit.
It's Dr. Credit Guy. Oh, hell no.
I don't really care. As long as we can help your client, call me Credit Guy, whatever. I'm fine with it all.
I got it. I love that. I love that. I mean,
And that's why I forgot, because it's such a non-issue for me.
that's great. I mean, and I love that, because some people, not that you're one of them, some people step on their high horse like, oh, well, I'm a broker, or I'm a this and that. And I'm like,
Yeah.
take, not your ego down a second.
Right.
You'll be okay, I promise. So
Right.
I'm gonna help you get through this together.
Right. Just chill. I got you.
Humility.
Right. That's hilarious.
But yeah, man, I mean, there's already been clients that I've sent to you, and they have already sung your praises. They haven't even purchased a home with me. They're just for the fact that you've been transparent, and just the fact that you've given, you've cared so much about the process to make sure that they're in the best position, so that way they can meet their objective.
Right. Yeah, I know who you're talking about, because I explicitly got a picture of a credit score increase. I think it was 31 points with a smiley face drawn on the screenshot.
I love
So
that.
she's like, oh yeah, my husband saw the score went up. He's super happy. And she sent me a picture with a smiley face drawn into the screenshot. So that's what it's about, bro. And again, it helps you, it helps me, because they're going to say, I didn't have a clue what to do. Trev put together this whole, crew of people to help me achieve my dream. That's who you need to talk to whenever you go to buy a house. It's literally just doing the right thing is what makes the money. The money is the easy part. And I hope that doesn't sound pretentious, but making money is the easy part. The hard part is finding people that care enough to take care of your clients like you would take care of your clients. That's the hard part.
That's the very hard part, because it's a relationship. It's a relationship over transaction, and
Right.
it's, I'm reading this book right now by Ryan Serhant called Sell It Like Serhant. And if you never read the book, it's geared towards real estate, but it's all about sales. And it is incredible. I love that.
He's
book.
awesome. Serhant is awesome.
Oh, I just got turned on to him like maybe a month ago. I got heard of $1 million listing and everything.
Right.
I got turned on to him from Ricky Caruth, which is another like high profile agent. And
Right.
I was like, yo, is this
This is the secret.
And he's got a few books and a TV show and this and that. I'm like, okay. No, I was like, if this dude can go from handing out flyers on the street to get a free gym membership and was broke, to 10 years later selling over $7 billion worth of real estate in New York City.
He knows something.
He knows something, and I need to listen implicitly to what he say. So but it all drives down to sales, and it's mentality, and it's mindset.
Right.
It's the same old cliche stuff that everybody always says, but never ends up following through.
Right.
So, but I think that about wraps it. I mean, do you have other stuff that you want to add? Any other plugs? I'm gonna get your YouTube information. I'm gonna get your Facebook information. Whatever number contact you want me to put down there, so people can reach out and call you, whatever it is. I'll
tell you this, because when you were talking about my story, I'm making changes to my YouTube page. I'm leaving this story there, but because I got new recording equipment, I'm actually recording some of the financial videos over, and I'm putting them on a separate page. So the YouTube channel that you're going to share has to do with my personal story, criminal justice reform, which plays into my story. And then there'll be another YouTube page that I just created that deals with financing stuff and credit and, smart finances. And whenever that is up and running, I'll shoot you a link, and your folks can go take a look at it from there. But that's going to be focused on helping people to live their best financial life.
I love that. You should coin that, man. You should coin that.
There you go. Done.
Coburn Credit helps you live your best financial life.
Done deal.
That's it. Well, I'm so glad that we got to do this. I'm thank you so much for spilling way over time with me, and just helping to hopefully make an impact on somebody's life, and really to if one person takes away anything valuable from this, it'll be a mission accomplished, and
Yes.
because that just continues to perpetuate the realization that, somebody may be listening to this and they may have a subpar credit score, or they may not think that they're ever going to be able to buy the home, but they can take the information that we've given to you guys, that we've given in this podcast and in this video, that can help get you, if you put it to work and you get professionals involved, and you get a team involved around you that will coach you. And that's the biggest thing, is that they can coach you along the way. You have to be coachable, and you have to take their word for what they're saying, and like realize that this isn't their first rodeo. This is time around the block. So if you put it to test and you put it to action, then you'll get the results. So, but that's basically about it, man. So I want to say thank you again for the time. I thank you again for all the information. Like I said, I'll link all your stuff down below. And you got any final words? Any shout outs you want to do? What do you got?
Shout out to you, man. I told you when you contacted me, seriously, you got my time as long as you need it, my brother. You're one of those folks who you could tell you have a really pure soul. And it's not like a personality thing. It's a deeper than that, a soul thing. And you can see it. Anyone that deals with you can tell that. And even just looking at your stuff on Facebook, you can tell you're one of those folks where it's like, I would be surprised if anyone has anything negative to say about you. I'm sure they exist because, that's just how life is. But, shout out to you. I'm always here for you whenever you need me, bro.
I appreciate that, man. Thank you. That really, truly means a lot. And it takes one to know one, man. It takes one to know one. So
appreciate you.
It's, the fact that we can, if I had looked back on the interaction when I was walking into that Fairwinds Bank, I would have never thought that it would have come down to where we're at right now. I would have never.
I agree.
If somebody had texted me, if you had texted me that morning, not even knowing you, hey, I'm going to meet you today, and I'm going to have such a great impact on your life that you'll even know. First of all, I'm going to be like, reply, stop texting me, whoever the hell this is. I'm voting for you, blah, blah, blah.
Blah. Spam.
Yeah, exactly. Spam and delete. I'm going to call 911. Hi, I'm getting these calls. But and you've made a greater impact on my life than you'll ever know, because of just being genuine and being pure, just like you were saying, and being generous with giving your time. Everybody knows the time is money, and you give one or the other, But the fact that you're willing, ready, and able to sit down and to do this, it really, truly means a lot to me. So thank you.
My pleasure, my brother.
And finishing off on an esoteric type of rant, Chris was the one that introduced me to, and I'll cut this out if you don't want it.
No, put it in.
The CIA papers about the Gateway experience, the Gateway voyage. So if you are looking to clear your mind and you're looking to, properly meditate with, really using what's inside your head, because I promise you have it in there. I'll link that down below, or send me a personal message and I'll send it to you. It's something I hold near and dear to my heart because meditation is really, really big for me. And those CIA papers that you sent me opened up my eyes to something I had no idea existed.
Yes, see, to expound on that a little bit, see, it's been around and people know it. They call it the secret, they call it whatever. It seems like sometimes there's a stigma to it, but for the people that don't know, the CIA basically proved, and you can go on their website in their vault and you can see this yourself, they proved that there's a thing called patterning. And what it basically is that whatever you focus on actually becomes real life reality. This is a study done by the CIA in the 70s, I think it was, and it gets really deep. They talk about parallel universes, and that's the reason why you can manifest your reality here. You hear all the gurus talk about it. You hear it's in the Bible. You hear about the secret. It's whatever you think will actually become a thing. And transcendental meditation is a thing. And the CIA studied and confirmed this back in the 70s. And it's not, one of those things where you get it from your grandma's uncle who believes in every conspiracy out there. You can literally go to the CIA vault and find this stuff.
Yeah.
And it's real. So yeah, send him a message and he'll send you a copy of it because it is incredibly informative. And it puts a a real life spin on mythical things you've been hearing about forever. It shows that no, this is based in reality, so much so to where our own government put money into it and researched it. So yeah.
And it's like it's tactical steps. It's tactical things that you can implement.
Right.
It doesn't cost you $1. It doesn't cost you any equipment. You don't have to have like Doc Brown from like Back to the Future with like nothing of that. Like it's I mean, if you wanted to make a trip out to Utah and go to the Monroe Institute, you surely could.
Right.
But I would rather just pay for the Gateway Voyage stuff myself. But yeah, so that's basically the wrap. And I just want to say thank you guys for tuning in. I hope we brought you some incredible value. Hopefully you took away something from this. And I look forward to helping you with anything and everything that you have and questions in regards to real estate, whether you're looking to sell, buy, or rent, or whatever it may be. I'm always going to be here. If you need any help in any aspect of having to do something with credit, you really need to, you would be doing yourself a disservice by not working with Chris Coburn. And
I appreciate that, man.
Just the amount, I'll probably bleep this out, but the amount of give a fuckness that Chris had for people is unprecedented for anybody else that I've ever worked with. So anytime I'm ever pressed into a corner where I'm like, I just don't know the answer, I know I can call on him, and without a doubt, he'll deliver right on the spot.
I'm here, my brother.
So I appreciate that. And thank you guys for tuning in, and hopefully we'll get some more of this content rolling for you.
We will.
Definitely, man. All right, y'all take it easy.
Peace.